Good morning, everyone. How are you? I hope audio and video is okay. Should I start, guys? Good morning, everyone. Quickly confirm so that we can start. Morning, everyone. Good morning, Ruby. Guys, audio and video is okay. Morning, Rupali. Morning, Ruby. Good morning, Rajni, Rupesh, Kushbu, Amit. Okay, we'll start. Okay. How many are doing the first class? Is that your first class? That means you have not done neither part one or part two, whether this batch, previous batch. How many of you are doing the first class? Even if you have done the previous batch, you can ignore that. Um, sure. I hope you guys got the book. Have you guys got the book for this part one? Have you got the book, guys? Um, so if you have done the previous classes, guys, that means you have done the previous classes. Maybe you have done the recordings of it, or maybe you have done the previous classes, or maybe live also. It's absolutely no problem. Uh, then I suggest you it will not be too helpful for you to do these classes, guys, because the content is going to be more or less same itself. And again, you will be wasting your 4 hours on doing the regular classes. Absolutely, your wish. I have no issues with that. It's just like since you have done the previous classes also, pretty much the course is not changed. Everything will remain the same, and honestly, you will waste your time in that case. On the contrary, if you have done the previous classes, still you want to see the latest classes, so there is no change. So I would suggest see the recordings of it, because recordings you can watch at 2x also, because you have already understood the concept. You can watch at 2x also, uh, and you can finish your course much faster also, because otherwise I have to go with the speed of a new student who has never done anything, and you have already done the previous batch, so you may not find it that helpful also. If you have seen the previous batch, then I think recordings would be a better approach for you. But if you still want to do the live classes, there's absolutely no issues in that. Okay. um, is that something I have to prepare before the classes? Absolutely not. You don't need to read anything before the class. You don't need to prepare anything before the class, guys. But I would strongly suggest once you're done with the batch, once you're done with the class, please revise. We will have the classes on Saturday and Sunday and Saturday morning, guys. And over the weekday, guys, I'll try to keep your MCQ sessions, your practice sessions, I'll keep it over the weekday, guys. So maybe two sessions or three sessions, I'll try to keep it on the weekday. Late evening, I'll keep it, and that's 1 hour max to max, 1 hour max to max in that case. So that whatever you are doing it, you please revise Saturday, Sunday, whatever we have done it, and we'll practice it. So by the time the batch is over, your entire concepts are done, your entire book is done, and all the practice questions are done. So with this entire circle would be done, guys, with this. So I suggest you would be best approach. You don't need to prepare anything before the class. Just revise whatever we have done it, guys, so that you can practice better, and we'll be done with the entire loop, guys. So consistency is the key, guys. I've seen people doing just the classes. They are doing classes from last 3 years also. What is the point of doing the classes if you're not writing the exams? So let's target to write the exams in May and June. Let's target the exams that you will write the exam in the May and June. Otherwise, no point of just keep doing the classes. You're not here to just do the classes, right? Eventually, you should write the exams. So let's target May and June window, everyone, so that you can clear this subject itself. Let's target part one to finish before that, everyone. Practice before that, revise before that, so that you can target that window itself. Well, target, guys, because otherwise what will happen, you are just doing the classes, you're pushing the next window, again you're pushing the next window, it will not be helpful for you. So let's target, and if you have any issues in the preparation side, you'll be in touch with me. Okay, Last point, everyone, which I want to really emphasize is we are having, unfortunately or fortunately, we are having the online classes, guys. So please be better engaged in the class, right? So that means don't do the classes on the mobile. If you are having a laptop, so please do the classes on the laptop, guys. Sit on the chair and table, guys. It's not like you are lying on bed and watching the TV, watching like a movie, guys. It's just not going to be helpful. Do it like a proper class. Sit with a laptop, with your register, pen, paper, Kelsey. I'll keep writing the lot of notes also. You can take a screenshot of the notes also. You can copy the notes also. I'll keep giving you the questions also. So please solve them. Otherwise, you will not find any value, everyone. Otherwise, you will not find any value out of these posts, guys. It's just like YouTube video you are watching it, guys. So if you really want to find the value, if you want to find the value in this case, then please do it regularly and please do it like a proper class itself. Is that okay? Lastly, I just want to have a better engagement in the classes, guys. So that means whatever the query I'm throwing at you, please be responsive in that case. And whatever questions you are having, stop me then and there. Okay. So that it's not like I have finished the entire concept, then you are asking it. Stop me then and there if any concept is not clear. Is that okay, guys? Everyone? Yes, no? After so much is one yes. Okay. Rupesh, you can use any calculator. Regular Kelsey of Casio. No. Casio, Citizen, any Kelsey, whichever a regular Kelsey, you can use that. Whatever you are using it, you can use that itself. So I'll take your question, John. So any of the usual Kelsey, can you see that? This Casio or Pad, anything, whatever works with you. You don't need the scientific one. No, you don't need financials. You don't need financials. Sure, John. John, have you heard the conversation we had? It? Yeah. So we'll be starting. This is our first class. So we are starting and targeting for the May and June batch itself. Okay. So I'll be taking regular classes over the weekend and over the weekday, maybe around 10 p.m. in the night. I'll try to keep one or two sessions for you for your practice sessions itself. Okay. Any other question, John, you have? No? Guys, whoever has not received the book, please be in touch with the VGLD team. They'll help you out to provide you the book. Please get in touch with the VGLD team. Have you got the access of your LMS, guys? Everyone got is there anyone who has not received the access of LMS? If you have not received the access of your LMS, please get the access of your LMS, guys, so that you can see the recordings also. Generally, whenever we do the classes, within 48 hours, the team will upload those classes on the LMS to you. Okay. Lastly, we are doing the practice sessions on the backer. So if you have not received the access of the backer, please try to get the access of the backer so that you can practice along with me. Is that okay? Uh, no, background will not start, John. Okay, how many of you have not aware about anything in the finance? Who is not aware at all in the finance accounts? Forget about the finance, basic accounts. How many of you don't understand? Everyone understands basics of the accounts, guys. Now, how many chapters we have? How many chapters we have in the part one, guys? Okay. First of all, is that mandatory for me? We are starting with part one. Is that mandatory for me to read the part two also? No, absolutely not. Part two is separate, part one is separate, guys. So it's not necessary you have to refer the part two lectures itself. You are going to do independently part one. There is no connection with the part two, guys. There are some topics which are common, but you don't need to worry about them. I'll do that in part two also. Uh, in part one, we are having, as per Becker, we are having 6 modules, guys, 6 chapters. So this chapters, what we are having, the Becker call it as 6 units, guys. Unit 1, Unit 2, Unit 3, 4, 5, 6. In that, we are having various modules, guys. So these modules are more like a subchapters. Subchapters. If you see here, guys, this is 1A, unit number 1A. So this is the first chapter. Like this, we are having 6 chapters, guys. Let me show you. This is my second chapter, planning, budgeting, and forecasting. This is my first chapter. Like this, we are having 6 chapters, guys. In these 6 chapters, guys, we are having these modules. So these are sub chapters, guys. These are going to be sub chapters. Is that clear, everyone? First chapter is the optional question chapter, everyone. You don't need to read this. It's a basic accounting chapter, guys. What is trial balance? What is this? So I'm leaving it for your reading, guys. Read this. I don't think there is any problem in this case. It's a basic 11th standard, 12th standard accounting. For CMA purposes, it's not relevant for you. But for your basic understanding, if you want to read it, you guys can read that also. Okay, so I'll be starting from second module, everyone, which is financial statement. Is that okay, guys? All right. Though I'll cover quickly the basics of the accounts also, guys. Since you guys are already aware about this, so I'll not go through the basics of it. Uh, when we talk about the journal entries, guys, how many rules of the journal entries are there, guys? How many rules of the journal entries are there? 3 rules. Hmm. Okay. Help me out. What are the 3 rules? Debit what goes out, debit what goes out, and credit what comes in. Yeah. I mean, is the rule correct or not? Debit what goes out, credit what comes in. No. Is it reverse? Debit what comes in, credit what goes out. Is that okay, everyone? Debit the receiver or giver? Debit the receiver, credit the giver. Credit the giver. So, for example, if you are giving, let's say me, you are giving a cash of $1,000. What entry would you do, guys, in your books of accounts? You have given me $1,000. What entry will you do? I am the receiver, right? So you will say AR debit to cash. Am I right? What will I do, guys, here? What will I do here? Since cash is coming to me, cash debit to you. Is this point clear? Uh, quickly try one more. A has given the cash to B. Quickly try A's entry. What is A's entry? A's entry would be A debit to cash. A's entry. A is giving the cash to B. A is giving the cash to B. So B debit to cash because B is the receiver and cash is going. What entry B will do? B will do cash debit to A. Is that okay? What is the last rule, guys, here? What is the last rule here? Debit all the expenses, debit all the losses, debit all the assets. Credit all the income, all the gains and liabilities. You guys can note it if you want to do it. If you're taking the screenshot, guys, I suggest you to paste it on the PowerPoint because your alignment will not go up and down. Done. Let's try one question here. The person has given the rent. This person has given the rent. What entry would this? This person has given the rent in cash of $1,000. What entry would this guy do? Try, guys, everyone. I think it's fine at everyone's end. Akshay, try logging out, logging it again. It's fine because I can see it here also. It's fine. Correct. Rent debit to cash because this is my expenditure and cash is going out. Correct. This person has done provided some services. This person has provided some services, and because of those services, this guy has got the commission of $100. What entry would you pass here? You are receiving the cash. You are receiving the cash of 100. You will not debit the service. You are receiving cash. Since you are receiving cash, you will say cash account debit because cash is coming to you, and commission is your income. So I'll say to commission. Is that okay, people? Anyone? John, clear? Not clear? Um, in all the transactions, whatever I'm going to write, guys, I will write the dollar values, guys. Okay. because we are doing the US CMA. So you should be more familiar with the dollar values. You might be doing other courses also where you might be using some other currency. So I'll stick myself to dollars only, guys, so that you becomes more familiar with the dollar values itself, guys. Second, everyone, in US, everyone, generally we follow calendar year, guys. Generally we follow calendar year. That means calendar year means from April to March. Calendar year means April to March. No, calendar year means January to December. Most of the cases in US, we follow January to December. Is that possible for me to follow any other year, guys? Is that possible for you to follow any other year? Yes, it is possible for you to follow any other reason or any other year if you are having a business reason for that. You are having business reason for that. For example, Walmart follows February to January, guys. So if you are having a business reason for doing that, you guys can do that. Is that okay, guys? Everyone? Okay. So that means whenever I'm going to talk about the period also, I'll be referring January to December only, not April to March. So don't get confused with that. Okay. Uh, Assets, guys. Asset is having a debit balance or credit balance. Asset is having a debit balance and liabilities are having the credit balance, right? Correct. Uh, if everyone, let's say January rent, guys, January 2025 rent, everyone, is approximately $1,000, guys. Okay. If I have paid this rent in the month of December, guys, in December 2024, I have paid the January rent, guys. I paid this rent, but the rent is for January, guys. Is this point clear? What entry would I have done it, guys? In December, what entry will I do? Correct. So basically, my cash is going. So I'll say to cash, $1,000. And I'll say here prepaid rent, $1,000. So if I make the balance sheet here, guys, I'll show here prepaid rent. So prepaid rent is $1,000. Is that okay? Now, in January, what entry would you do for this? In January, what entry would you guys do? Would you do any entry in January also? This is the asset which you have created here, guys. This is the asset which you have created. Now you have to undo that asset. Asset is having debit balance. Now I have to reduce the asset. So I'll credit that, everyone. So to prepaid rent. And I have to book the rent also as the expenditure. So $1,000. Absolutely correct. This rent will go to PNL, everyone. PNL account debit to rent expenditure. Is this point clear, everyone? company is having a policy, guys. Company is having a policy that whatever is the month, if this is the month, guys, this month salary, they will pay on 7th of the next month. Point here. So that means December 2024 salary. When will they pay the defender December's 2024 salary, guys? December 2024 salary, when will they pay? They'll pay on 7th of January 2025. Very good. So on this date, guys, on 31st of December, what entry would you pass, guys? 31st of December 2024, what entry would you pass, guys? Let's say salary is $100, $1,000. John, you're not paying the salary. On 31st December, you are not paid the salary. Lakshita, are you receiving the salary? Are you receiving the cash salary? Khushbu, are you receiving the cash? I'm just saying, Akshay, that December salary you have paid on 7th of January 2025. December month salary you have paid on 7th January 2025. What would be the journal entry? That's it. Now you're not paying the salary. You're not paying the salary. You're not paying the cash. No mistakes, guys, here. Guys, everyone, in December, are you paying that amount? No, I'm just saying 31st of December, it's written here, 31st of December. Guys, on 31st December, have you paid the salary? Everyone. Have you paid the salary on 31st December, everyone? No. You have paid on 7th of January. So I'll not do any entry related with the cash. Point clear or not? Now, the person has provided the services in December. Has the person provided the services or not? Has the person provided the services or not? Now, please hear me out, guys. Yes, services I have received it, guys. Listen now listen to me, guys. Yes, the person has provided the services. So that means I have to book the expenditure. So I will do here wages account debit $1,000. Point clear or not? I will book the expenditure, but I'm supposed to pay that amount. So that is my liability. Liability is having credit, everyone. So I'll say to wages payable. Simple point. Is this point clear? Yes, no. Every account in accounts, it's a double entry system, guys. Double entry systems. That means every accounting entry will get adjusted. Correct. You have not paid, no? Okay. Now, wages. Where this wages will go, guys? Where these wages will go? Where the wages will go, guys? Wages will go to P&L. So I'll say profit and loss account debit 1,000 to wages. Is my wages account cleared? Is my wages account settled? Yes. I have debited here, I have credited here, this account is settled. Point clear, everyone? Any doubt, guys? Please let me know. I'll repeat this if it is not clear. Now, wages account, wages payable account, is it settled? It is not settled. Any account which is not settled will go to your balance sheet. So when I'm going to make the balance sheet here, guys, I'll show my liability here. When I'm going to make my balance sheet, I'll say here wages payable, which is $1,000. So any account which is not closed will go to balance sheet. Is this okay or not? John, clear or not? Guys, clear? What entry would you do next year on 7th of January when you are going to pay it? What entry would you do? Now, when I have paid, guys, when I have paid it, so that means cash is going. So to cash. And whatever the liability I have created, I have to reduce that liability. So that's why wages payable debit. Is that okay? Now it is finished. Now this is also finished, guys. And my cash balance will reduce. Any doubt, anything not clear, guys? Akshay, clear? Guys, clear? You want to take a screenshot? Please do. Tanvi, clear? Shivam? Whole point, Khushbu? Okay. Now listen carefully. I'm repeating again. Don't worry about this. I'm saying you receive the services in the month of December, Khushbu. Point clear? Have you paid any money, Khushbu? Have you paid any money in December? No. But you have received the services. That means that guy has provided the services to you. So that means I have to book the expenditure. Point clear, Khushbu? So that's why I have done wages account debit in this case. But you have not paid, Khushbu. So when you have not paid, that person has provided services to you. You have not paid it. So isn't it your liability, Khushbu? Person has provided the services. You have not paid it. So it is liability. That's why we have booked the liability to wages payable. Liability is having a credit balance. Liability is having a credit balance. That's why I have credited here. Is that okay? Outstanding salary, wages payable, same thing. Is that okay? Okay. Now, Khushbu, this is my expenditure. Wages is my expenditure. So since it is my expenditure, it will go to my income statement, P&L statement. So that's why wages, P&L account debit to wages, because wages is my expenditure. Now is Khushbu, is my wages account settled? Yes. I have debited with 1,000. I have credited with 1,000. Account settled. Is that okay? Now, is wages account settled? Wages payable account settled? Have you done the debit of this? No, you're not yet. So any account which is not settled will go to balance sheet. So that's why I put it into the balance sheet here as the liability. Is this okay? This is my situation on 31st of December. Next year, what will happen, Khushbu? On 7th of January, I will pay this money. When I'm going to pay the money, I am giving the cash. I am giving the cash. That's why I'll credit the cash. Is that okay? Now, whatever the liability I have created, I have to reduce that. Liability is having a credit balance. Liability is having a credit balance. When I have to reduce it, I have to debit it. That's why I've debited that. Now, this account is also settled. Wages payable is also settled with this. Any confusion, guys? Anything not clear? Okay, let's try one more question. I think we need to practice this question. Income is a different point. Salary is a different point, Harshit. Income is something I'm supposed to receive. Salary is I'm supposed to pay. So one is income, second is expenditure. Clear? See, it could be other way, Harshit. One is, Harshit, you are supposed to receive some money. I hope you understand. I hope it is clear now, Harshit. Let's try one question here. I'm making slight changes, guys, so please hear me out, okay? Uh, your employees, we call it outstanding salary. There's no accrued salary. Same thing, similar thing, almost similar thing. Okay, we'll talk about this. These are your employees, okay? These are your employees. These guys have provided the services to you in the month of December 2024. Guys, I'll quickly move this because we are doing the 12th standard accounting. Okay, which is this is all not nothing is in your course. I'm just trying to brush up items in that case. Beyond that, I'll move it, guys, because CMA is not about the general entries. Services you have provided in December 2024. Point clear up till here, guys. Their salary, their wages, guys, their wages are approximately $1,000. You have paid, you have paid. In December, you have paid $600. On 31st of December, you have paid $600. How much is the balance amount, guys? $400. This $400 you have paid on 7th of January 2025, guys. Is the premise clear? What I've written, is that clear? What entry would you do on 31st of December with the amount? With the amount. What entry would you do on 31st of December with the amount, guys, please? Please write one entry in one go, guys. I cannot join your multiple chats together. All entry in one chat. Okay. I think pretty much everyone gave the correct answer. So yes, wages expense, guys. Wages expense, which we are going to debit, is $1,000. To cash, 600. To wages payable, 400. Correct. What entry would you do, guys? Okay. How much will go to PNL, guys? How much will go in this time on 31st of December? How much will go to PNL? $1,000 to wage expense. How much will go to balance sheet, guys? How much will go to balance sheet? This wages payable will go to balance sheet. Good. On 7th of January, when I have paid this, guys, what entry would you do, guys, here? Correct. Wages payable, debit to cash. 400 bucks. Guys, anyone, any question? Should I move? Anyone, any doubt? Anything not clear? Now I'll probably start more from a CMA angle, guys. Okay. Now we'll be not doing general entry, guys. We will be not doing general entry. General entry is just to help you that how we are going to move this. Now I'll talk about the financial statement. How many financial statements are there, guys? How many financial statements are there? Three. What are the three financial statements? Income statement. Trading, there is no separate in this case. Income statement, which is something we also known as P&L. Uh, then we are having balance sheet also. Balance sheet, which is also known as statement of financial position. And then you are having cash flow statement. Now, there are two more account, everyone, which is statements of changes in the equity and statement of the OCI. But these are not two major ones, guys. These are not two major ones. Major are the three Ds, everyone. Profit and loss, balance sheet, cash flow statement. Is that okay, guys? If you see your entire module one, in fact, your entire unit one is based on that, guys. If you see uh, all of it, if you see up till here, like this also, this is all about the balance sheet, various items of the balance sheet, guys. Here, I'll talk about here. Here, I'll talk about the cash flow statement. This is balance sheet items, profit and loss items, asset, receivables, inventory, assets, liabilities. These are two more related with the P&L. So unit one, we will dissect every element of the balance sheet, uh, cash flow statement, P&L. Every item I'm going to discuss in much more detail. Like that. Today, I'll have a very basic macro view, everyone. And from tomorrow onwards, we'll go detailed about each item in the back of the financial statement. Is that okay, people? Okay. Whatever the profit and loss we are making, guys, profit and loss, do we make profit and loss for the whole year or for one day? Profit and loss, do we make for the whole year or for one day? But P&L statement is the something we make it for the period, everyone. It could be year, quarter, whatever you're making it. It is for one day. It is not for one day, guys. It is not for one day. Balance sheet, guys. Balance sheet, do you create for the whole year or for one day? Yeah. Balance sheet, we make it is basically shows your position only for one day, guys. balance sheet shows you the position only for one day, guys. For example, for example, what items comes in the balance sheet, guys? Maybe assets, maybe liability. But these are the situation, my situation only for one day, guys. This is my situation for one day only, guys. For example, guys, if let's say you come to me on 10th of January 2025, you come to me and you ask me that how much cash balance you are having. I said, I have almost, let's say, $10,000. And if you ask me that how much bank loan you are having, I said, maybe I'm having a bank loan of HDFC, maybe $500. But this is my situation on 10th of January, guys. Would that same situation be on 11th of January also, guys? Would that necessarily same situation for the 11th of January? No. Maybe I won a lottery next day, guys. Maybe my cash is going to be $1 million. Point clear? Maybe I have repaid my loan of the HDFC on 11th of January. So whatever is the balance sheet item we are having, it is only for one day. Is this point clear or not? Generally, this one day is end of the year. Is end of the year. Generally, this situation, what you are getting is end of the year. Any problem? Rupali clear? Maruti clear? Tanvi? Cash flow statement, guys. Cash flow statement, is it for cash flow statement? Is it for one day or is it for the whole period, for year? Cash flow statement. There is a difference here. Difference in the cash balance and cash flow. Are they same thing, guys? Cash flow and the cash balance is the same thing. Cash flow and the cash balance is the same thing, guys. No, they're not same. They are not same. What do you mean by that? For example, guys, if I'm saying, let's say I'm looking into my Kotak bank statement. Kotak bank statement. Maybe here everyone on 1st of January, um, 1st of January, I'm having, let's say, 5 lakh rupees. But during the year, everyone, maybe I received some salary, I received some interest amount, I received some dividend also. Let's say all of it is coming approximately 10 lakhs. Okay. And then maybe I'm paying some EMIs, I'm paying some expenditure. Uh, Maybe I have taken loan, I've used that money for going out for a vacation. Let's say this is approximately 2 lakhs. So in this case, how much balance is left, guys, here? So 5 lakhs plus 10 lakhs minus 2 lakhs, balance is 13 lakhs. So this is my position, guys. This 13 lakhs which is coming, it is my cash position, guys. Is that okay? But whatever is we are having here, whatever we are having it here, guys, some cash is coming, some cash is going. This is cash flow, guys. Is the difference clear? Everyone, any doubt? No, yes, maybe. So cash flow is how much? 10 lakh minus 2 lakhs. So 8 lakhs is my cash flow. It's going, it's coming. And cash balance is 13 lakhs. Sure. Rupesh, which point? Which point? Everything we have discussed cash only. Which cash point? You have not heard anything. How much, how you're getting 13 lakhs rupees? How much beginning balance you are having? How much beginning balance you are having? Who's about 10 lakhs? Listen carefully. Whatever you're doing, stop doing that. Listen carefully. Okay. 1st January, your balance is 5 lakhs. Point clear up till here, Rupesh? Yes, no. You have received 10 lakhs. How much is now money now? 5 lakhs you are having, 10 lakhs you have received. How much money you have now? 5 lakhs you are having, 10 lakhs you have received, 10, 15 lakhs. You paid 2 lakhs. How much is left? You paid 2 lakhs, 13 lakhs. That's how you get the 13 lakhs. That is your cash balance. During the year, how much cash inflow and outflow you are having? Inflow is 10 lakhs, outflow is 2 lakhs. So cash flow is 8 lakhs. Okay. Any other question? Guys, anything not clear? Um, Whenever we talk about the financial statement, guys, there are different users of the financial statements, guys. There are different users of the financial statement. For example, if I can say investor, let's say you are the investor, you're looking to invest in a company, and maybe lender, everyone. Lender could be SBI. SBI is looking to give the loan to this company. Let's say I'm looking the financial statement of TCS. So you are looking that I want to invest in this company. Lender SBI is looking, should we give the loan to this company or not? Or maybe they have given the loan also. Would the way you are going to look into the financial, would that be approach same, guys? For you, the approach would be the same for looking into the financial, guys. Financial statement. That means what you are expecting from the financial statement, would that same thing would be looked by the SBI also? No. Okay. What is going to be the difference, guys? What would you be looking? What would you be as a finance person would be looking? You will be looking more profits. When I say profit, you will be more concerned about PAT, PBT. You will be concerned more about how much EPS they are having it. Why would you matter cash balance? You will be looking more from a growth of the company perspective. But if I'm talking about lender, SBI, what SBI would be more concerned about that? How much is the liquidity they are having it? They'll be more concerned that we are getting the money on time or not. Company is having sufficient funds or not. They want more security, everyone. They want more safety, everyone. They don't want company to take unnecessary risk also because their money would be at risk. You want company to take the risk, only then your money is going to grow. But SBI does not want the company to take unnecessary risk, guys. Point clear what I'm saying? Yes, no. Now, love me. Depends on the circumstances. Depends how much power you have given to SBI, how much loan you have taken, how much power you have given to SBI, what are the terms and conditions. There are many factors. Quickly read this. I am on I'm here, guys. Page number 19. Just this only. Read and confirm, please. 19, module 2, unit 1. Please confirm once you're done. Is it clear, everyone? Okay, I'll move. Any question till now, guys? No, John, clear? Now, income statement, guys. Income statement, uh, I can bifurcate into two categories. It can be operating, and any guess what could be the other category? Operating and non-operating. In short, we'll call it O or NO, guys. Okay. Anything which is related, anything which is related with your core business, guys. Anything which is related with the core business, we call it operating. Anything which is obviously not correlated with your core business, everyone, we call it non-operating. Is that okay? For example, guys, let's say I'm running a business. I'm running the business of making shoes, guys. I make the shoes and sell the shoes, guys. Now, I am purchasing leather, everyone, so that I can make shoes, guys. Is it operating or non-operating? I'm purchasing leather for the purpose of making shoes. It is operating. It is operating. You can write O and N O also, just for sure. I'm paying my staff the salary. I'm paying the wages to my staff, guys. O or N O? Operating. This is related with the business. No, John. How will I make the shoes? I'm not going to make it, right? I don't know how to make it. I will hire my staff. They will do it. So this is related with my business only. So operating. Point clear? I am having some extra cash. And with this extra cash, let's say I have done any kind of a fixed deposit. I've done FD with that money. And now on that FD, I'm getting interest. O or N? Non operating. Is this okay or not? Is this okay or not, guys? See, generally people get confused, but how you got the money for the extra cash? Obviously, it is the business cash. And obviously, I have used that money, business cash. So ideally, should it not be operating? No, don't get confused with this. With that logic, everything is business only. I'm not doing any gambling. No, I'm eventually using business money only. But that's not what we are looking at, that business or not. Is that you're related with your core operation or not? That's what we're looking, guys, here. Point clear or not, everyone? So does that means that interest will always be non-operating? Interest will always be non-operating, guys? Not necessarily. Not necessarily. For example, guys, if I'm saying interest, everyone, for Asian Paints, they are getting the interest income. Asian Paints, would that be O or NO? Non-operating for Asian Paints. But if I'm saying interest income from A for HDFC Bank, O or NO? For them, it's operating. Point clear what I'm saying or not? Guys, is that clear? So it depends on your line of business. What line of business you are? It depends. Anything, whether it is O or NO, it depends on your line of business in this case. Rupesh, clear? Yes, no. Any doubt, guys? I have a question. Why do we do that? Why do we do that? How does it matter? O or NO, how does it matter? Why do we segregate that? Eventually, it's the income. Enjoy it. Why we segregate? This is operating, this is non-operating. How? Why? Is the problem clear? I'm saying we are segregating that, boss, this is operating income, this is non-operating. Why to do that? Eventually, income is income. What is the problem? Let it be. Why separate operating and non? Yeah, but what will you achieve with that? Okay, from that business, deliberate more. What will you achieve with that? Okay, let's try to do it with one example so that you can make more investment, more share. Let's see. There are two companies, A or B. Let's say profit of company A is $100. Profit of company B is $100. Is that okay? Which is a better company, guys? Weird question. Both are same. There's no better here. Both are same. Now I'll give you the breakup of this. Okay. Um, operating is 90 and non-operating is 10. In case of a B, operating is 40, non-operating is 60. Now, if I ask you which is better company, B is better. Why B is better, person? Because high non-operating, because non-operating is high. Zomato, their profit is 100 crores. Out of that, 95 crores profit is coming because of interest on FD. Okay, interest on FD, person. 5 crore is coming because of their business, which is food delivery business. Is it good or bad? Person, good or bad? Why is it bad? As per you, 95% is coming from this non-operating. It should be good. Why is it bad? 5% is coming from operating. It should be good as per you. You have not invested, Prasanna, in Zomato, so that Zomato with that money, Zomato is doing the FD. FD, you can also do it, no? Why you have put the money into the Zomato? Because the business is different. They are into the food delivery business, right? That's why you have invested the money in Zomato. If FD Zomato is doing the FD with your money, you can also do the FD with that money. Point clear, Prasanna? So obviously, we are looking more operating profits, higher operating profits, right? See, I invested in a company because I like the business of that company. If company is also doing the FD with that money, then what is the point in that case, right? So that's why I'm looking more operating profits, everyone. Again, operating profit is something which is more sustainable, guys. Because non-operating, if I talk about company B, maybe this year they are having 60. Very good, because maybe this year interest rates are higher. That's why they are enjoying it. How about next year? This is their core business. No, they should get the money from the core business. Their core business is really bad. 40% they are getting from the core business. Next year, maybe the government reduce the interest rate. Then what will you do in that case? So obviously your core business should be good enough. That's why A is a better thing here. Prasanna, clear? Any doubt here, guys? Interest expenditure, guys. Interest expenditure. Rakshita, not clear? Interest expenditure, guys. O or N? Interest expenditure. Again, it's NO, guys. Again, it's NO. Again, it's NO, guys. Now, many people will argue in that case, no, but the loan you are taking, it is for the business. Loan, what you're taking, it is for the business. I'm taking that money for setting up a factory. Again, that's not what the point is. Obviously, everything is related with the business. That extra money you got it from the business. How you're making the FD? You're not putting your personal money. Whatever is the extra bit money from the business, you are putting that also. We are not looking that. We are looking what is your core business. Your core business is making the shoes. From that, whatever is coming is going to be operating. Anything other than that would be non-operating. So interest expense will also be non-operating. Point clear or not, everyone? Any question? Okay, let's read it from the book. Then I'm going to move. I'm just telling. I'm here. 1.2, guys. Please read up till here. Page number 20, 21. I'll leave this portion on the leave this portion of the continuing operations. I'll talk about the continuing operations later. Rest you guys can read it up to here. Please read and confirm. It's written here, Akshay, page number 2021. Cost classification. What is the cost classification? What is mentioned, Akshay? I'm asking what is mentioned in the cost classification. Can you give me one or two words what is mentioned? Yes. Okay, send me the screenshot later. No problem. Should I move, guys? Everything is okay? Should I move? Recurring and the non-recurring. You're saying because of this, right? It's the same thing, no? Recurring earning and the non-recurring Khushbu. For example, Khushbu, if I'm making the sale of shoes, if I'm selling the shoes, selling the shoes, is it operating, non-operating? Operating. So operating is a regular thing. No, it's not like I have sold the shoes only once and after that I will not sell the shoes. It's a recurring thing. I'll sell today also, tomorrow also, day after tomorrow also. I'll regularly sell it. Point clear, Khushbu? So it's a regular thing. But maybe I have some extra cash, and with that extra cash, I have done the FD, and now maybe with that I'm just generating the interest. But Khushbu, not necessarily every year I'll have that extra cash. Maybe I will not do the FD. So it is non-recurring. So that's exactly what I was telling you, that why we prefer Khushbu operating, because it's a recurring thing. No, I want more sustainable thing. Remember the example which I gave you? Maybe this year you made the profit. Maybe this year you made the profit of 60 this year. But how long you are going to sustain? Next year, if your interest rate is not going up. That's why I prefer higher operating income. Why? Because it is sustainable. Sustainable means it is more recurring in the nature. That's why I've invested in the company. You know, that you are going to have this sustained profit. This is recurring. Operating is generally recurring, non-operating is generally non-recurring. That's what we meant here. Clear? Please keep asking the question, good Khushbu. Please keep asking the question if it is not clear anything in the book, guys. Don't use the break time which I'm giving you for reading for time passing it, guys. Please read this so that later on when you're reading on your own, you will not find the problem, guys. Anything which is not clear in the language of the book, please ask, guys. Let's quickly do it together. Don't look into the answer, guys. Don't look into the answer. Service revenue over NO. Let's do that. Service revenue over NO. Can revenue be related with service? Can revenue be related with service, guys? Yes. For example, VGLD. VGLD is not selling you any product. They are selling you services in that case. So that's why it is operating. Interest income over NO. NO. Gain on the sale of the investment, guys. Gain on the sale of the investment over NO. NO. Correct. Cost of sales. That means whatever material I have sold, whatever the material I have sold, what is the cost of that, guys? Operating. Selling expenses, guys. Selling expenses, because if I'm not doing marketing, if I'm not selling, how will I sell that? Operating. General and admin expenses, my rent for my office, any admin expenses I'm doing it. Correct. It is operating. It is related with my core business. No, if I don't pay the rent of my showroom, how will I sell it? Obviously, it is operating. Point here. Interest expense, no. R&D, guys. R&D is operating, guys. If I'm a pharma company, guys, if I'm a pharma company, if I'm not doing R&D, how will I do? How will I launch the new drug? How will I launch the new medicine? I have to do the R&D. That's my operating. Point clear? Quickly read this. Simple. Same. They have bifurcated with the values on it. That's all. Read and confirm, please. Page number 20. I'll wait for your confirmation. Page clear. Guys, any doubt till now? Anyone, any doubt till now? No? I'll do a basic format. Why? How will I know, Lakshita, what is it? What is it? From why we are reducing these expenses? Is that what you're saying? These are the expenses, no, Lakshita? Expenses we are going to reduce, only then we are going to arrive at the income, isn't it? These are the expenses. No problem. See, don't get confused that operating is going to be only the expenditure. It can be also no, operating expenses income. That's why we have done that. No problem. Good. Please keep asking whatever is coming to your head. Okay. Uh, should I move? Now, sales, guys. Sales. And from this, if I'm going to reduce COGS. What is COGS? COGS is cost of goods sold, guys. What is cost of goods sold, guys? Okay, before that, sorry. What do you get? Sales minus COGS. What do you get? We get net profit. What do we get? We get gross profit. Gross. Now, I'll briefly cover the COGS, guys. COGS, I'll cover with you in much more detail when we will discuss the costing element. I'll cover much more detail. Briefly, I'm covering what is COGS. COGS in a very simple way is my cost. Cost to finalize, cost to make the product, guys, is known as COGS. Is that okay? This product, I am selling it via my showroom. I'm selling my product via showroom and I'm paying my showroom rent. Is my showroom rent a COGS, guys? Is my showroom rent is COGS? No. Because, Rupesh, because of showroom rent, my product is not getting made. My product is getting made in a factory, so it has no connection with the showroom rent. Point clear, Rupesh? So it is not helping me in making that product. Rupesh, clear? Lakshita, clear? Guys, any question, please ask me. generally we are looking any expenditure which is basically to finalizing and finishing my product would be my gross profit, guys. Would be my COGS, guys. For example, guys, let's say I am using any raw material. There is a labor who is working on making that product, factory overheads. These are the items which is basically related in making the product, everyone. That's why it is going to be COGS. Is that okay, guys? What I'm saying? So this will get it COGS, and I'll discuss the COGS much later in the costing also, guys. Okay. From this, guys, I will reduce SG&A. SG&A is basically selling, general, and admin expenses. Now here all the showroom rent, every item will come here, which is not coming above will come here, guys. Is this okay? So this is the expenditure which is related with the manufacturing, guys, finalizing the product. This is related with the non-manufacturing. Difference clear, guys? Everyone? Uh, should I move? Let's go to sales is $100. My COGS is $20. Please tell me what is my gross profit. Obviously, gross profit is $80. If I ask you what is my gross profit percentage, guys, GP percentage, how do you calculate the gross profit percentage? Gross profit divided by sales. How much is that? Gross profit divided by sales, John. So 80 divided by 100. So that means 80%. Is that point clear? If let's say everyone, if let's say nothing is given, these items are not given, can you tell me what is my gross profit now? Yes, 100 into 80% I'll do. 100 into 80% I'll do it, guys. I'll get gross profit. Point clear what I'm saying, guys? Let's try that. If I'm telling you, people, I'm telling you that sales is $150, guys. Your gross profit percentage is $20, 20%, sorry. Sales is 150, gross profit percentage is 20%, guys. What is going to be my COGS, guys? Try. Akshay, COGS you are saying is 30? I'm asking COGS. I'm asking COGS, guys. First, I'll calculate gross profit percentage. Gross profit percentage is 150 into 20%. That means 30. If this is coming 30, if this is coming 30, then what is this value? This value is 120. Simple. Is that okay? How I'm getting it, everyone? Quickly try one more question. Sales is 150. Gross profit percentage is 10%. What is COGS? Correct. I'll calculate here. What is my gross profit here, guys? Gross profit is going to be 150 into 10%, everyone. That means $15, guys. And COGS will be 135. Can I say, guys, in a different way? That if my gross profit is 10%, that means my COGS is 90%. Can I say that? Yes. You see here, guys, I can do directly here. Do that directly. 150 into 90%, guys. Are we getting the same answer? 135. Do that. 150 into 90%. Are we getting 135? Check. Same. Same thing. Guys, point here. See, basic point, no, guys. Sales minus gross profit is equal. Sorry, sales minus COGS is your gross profit. If I'm saying this is 10%, this is 100%, then what is COGS? Obviously, I'll say shuffle this minus COGS. So if I shuffle this and calculate the COGS, it would be 100% minus 10%. That means 90%. Same. Is this point clear, everyone? Okay. I'll continue the table, guys. We were making here. Now, this after reducing this, we will get EBITDA. EBITDA is earnings before interest, depreciation, amortization, and tax. Okay. From this, everyone, I'm going to reduce depreciation and amortization. Then we are going to get EBIT, earnings before interest and tax. Then I'm going to reduce interest, guys, here. We get PBT here. And then I'm going to reduce tax from this. And what do we get, guys? We get PAT here. Profit after taxes. We also call it net income. You guys can copy this. Done. Should I move? Hmm. Uh, Two companies, guys. Company A, company B. PBT, everyone. PBT of company A is minus 300. That means they are having a loss. If they are having a loss, will they pay the tax, guys, here? there would not be any tax here, guys. Loss of company A is 300. Loss of company B is also 300, guys. Point clear? If I ask you which is a better company, a very stupid question. Both are same. There is no better here. Point clear? If I tell you, that the gross profit of everyone is $1,000 here, and this is minus 300 here also, guys. Now it is a what is a better company, guys? Okay. A is a better company in that sense because at least they are making the gross profit level, they are having the profits. At the gross profit level, they are having the profits. Many a times, guys, you have seen in the Shark Tank also, they generally ask you that how much gross profit you are having it, guys. They generally ask you how much gross profit you are having. And generally, when the gross profit is higher, Vinita is very excited about this. Why is that so, guys? Why they are focused so much about the gross profit? Why they're so concerned about the gross profit? Sale as mentioned that. If I'm saying company A, company B, sales is same? Not really. Obviously, I'm saying just because of the gross profit. No, turnover is not the same. No, so not. Sale is same, guys. If I'm telling you that gross profit here is 70%, gross profit here is 20%. Now, which is a better company? A is a better company. So sale is not the angle, no, guys. Sale is not the angle because sale is the same. Point clear what I'm saying, guys? John clear? Sale is not the problem. Sale is not the point. Point is, can company B, can company B incur in the marketing expenditure $50? Can we afford to do the marketing of $50, guys? No. Even if they do it, they'll have a loss of $30. Point clear or not? Can company A do it, guys? Can company A do it? Yes, they have the money. They can do that. So basically, everyone, the more gross profit you are having, gross profit is more like a deep pocket, guys. Gross profit is more like a deep pocket you are having. The more deep pocket you are having, everyone, I can do more marketing, guys. I can do more marketing in that case. Point clear what I'm saying? That's why they are more excited about the gross profit because the higher margin you are having, I can do more branding, guys. I can do more marketing in this case. Point clear or not, guys? Yes, no, maybe. That's why. That's why. See, it's a vicious circle, guys. Now hear me out, please, carefully, guys. The more higher the gross profit I am having it, guys, right? Higher the gross profit I'm having. Can I do more marketing, guys? Can I spend more money in the marketing? Yes, I can spend more money into the market. When I'm doing more marketing, guys, your brand recognition is going to be much more. Your brand is going to be more visible now. Your brand awareness would be higher, guys. When the brand is everywhere, guys, is it going to increase your sales or decrease your sales? It is also going to increase your sales. Eventually, it is going to. Eventually, it is going to increase my gross profit in the long run also. Point clear what I'm saying, guys? So it's a vicious circle, guys. It's a vicious circle. Gross profit is good. I can do more marketing, more brand awareness. That means my sale is going up. That's why these are such a nice business, guys. These are such a nice business, everyone. For example, if I take the classic example of a Coke, guys, Coca-Cola, they are making the sales. They generally sells the bottles. Bottle is approximately 20 rupees. What is the cost of that bottle, guys? The COGS cost is approximately 1 rupee, guys. That's it. Because it is nothing but the sugary water, no, guys, nothing else. So the cost of making the Coke is 1 rupee, guys, but they are selling for 20 rupees. How much is the gross profit they are having, guys, here? 19 rupees they are having it. That means how much is the gross profit percentage they are having? Almost 90% they are having. Point clear what I'm saying, guys? 1995. Yeah, whatever. Is that okay? That's why that's the whole reason. No, they can hire so many celebrities, they can hire so many sports personalities in that case. Point clear what I'm saying? Should I move? Correct. More money you can use it for marketing itself, guys. Uh, uh, if gross profit is 1,000, EBIT is 400, and PBT is there is a loss of 300. Possible? Uh, hmm. From this to this, guys, from this to this, why is it going down? From 1,000 to 400, why is it going down? It is going down because of SGN, selling general and admin cost, guys. It is going down because of the depreciation, guys. Why is it becoming negative, guys? Because maybe I have taken more loan. Since I have taken more loan, maybe my interest expenditure is very high. Point clear, guys, what I'm saying? For example, guys, if I'm just more concept level, if I talk about everyone, if I'm saying uh, gross profit is higher, but EBITDA, everyone, EBITDA is very low. What does that signify? Maybe companies SG&A is very high. That means maybe the company is pushing a lot of money into the marketing budget, or maybe they are opening a lot of stores. Maybe the company is opening a lot of stores, everyone, and because of which the rental cost is very high. Point clear what I'm saying, guys? Yes, no? Any doubt here? Rakshita, clear? EBITDA. EBITDA of any company is very high, but EBIT is low, guys. EBIT is very low. What do you think, guys? Is this a manufacturing company or service company, guys? Can you find out with this? Manufacturing or service? Why manufacturing, guys? Correct. Good point. It should be a manufacturing company, guys, because if you are a manufacturing, that means you are having a lot of plant and machinery, guys, right? You're having a lot of plant and machinery, let's say Tata Steel, and because of which the depreciation is going to be very high, guys. Is that okay? But if you are a service company, then plant and machinery is going to be lower. Depreciation is going to be lower. That's why it looks like it's a manufacturing company, guys. Is that clear what I'm saying, guys? Because the difference in them is the depreciation only. Difference is the depreciation only, guys. Is that okay? Let's say EBIT of any company is very high, but PBT is low. What do you think? Is it a manufacturing or service company? Because you have to do reverse now. That's why. Previously you said manufacturing. Now you have to say reverse. That's why. Why service? Just because you have to do reverse. Why service? Anything can be happen, any can be, but generally, what are the chances, Lakshita? Obviously, it can be both. Previously, also it can be both. What are the chances of that? Why service? Or if you're saying manufacturing, why manufacturing? Think, guys. Yeah, you tell me, John, manufacturing or service? Obviously, anything is possible in anything, but it looks like a manufacturing company. Reason being, guys, reason being, um, when you are having high, okay, in manufacturing, guys, generally you are having high fixed assets. Now, how you get the money for the fixed assets, everyone? Generally, you fund it via taking loan, guys. 75% of that is generally funded via debt, everyone. So obviously, everyone, when my loan is higher, that means I'll be paying more interest, guys. That's why, since the interest cost is higher here, guys, since here the interest cost is higher, looks like it's a manufacturing company, not a service. Service company is generally a very cash rich companies, guys. If they are very cash rich company, they don't need to take the loan. No, that's why if you see most of the service company, they keep on giving TCS, Infosys, they keep on giving the dividend because they are having cash surplus. Point clear what I'm saying? Harshit, clear? Okay. Any question till now? Now, if you see income tax preparation, when you bifurcate the income tax like in statement, sorry, when you bifurcate the income statement like this, gross profit, operating profit, EBIT, PAT, net income is PAT, guys. This is something we call it multi-step, guys. This is something we call it multi-steps. We call it multi-steps, guys. Multi-step income statement. Point here. But whenever you are not bifurcating it, you are saying these are all my income items. These are my expense items. So this is something we known as single step. Difference clear, guys? It's just the presentation difference. How much is my PAT coming here, guys? In this question, what is my PAT? PAT is 1.5 lakhs, right? 150,000. Same here, everyone. PAT is still going to be same, everyone. PAT is not changing. It is just the presentation difference, guys. It is something just the presentation difference, guys. There is no other difference barring the presentation. Is this point clear, everyone? Quickly read this. I think this is simple. Page 21 up to here, please. 21, 22, read the illustration. You don't need to see how we have done it. Up till here, read and confirm, please. 21 and 22, guys, please. Is that okay? Clear? Should I move? Okay. Now, I'll briefly covering, guys, what is continuing operation. I'm briefly covering it. The rest detailing, I'll cover it with you later, everyone. Two things, guys, here. One is continuing operation. Second is discontinuing operations. Right? So CO means continuing operations. Second is DCO. DCO is discontinuing operations. Continuing operation, discontinuing operations. For example, if I talk about, let's say, Reliance. Reliance is having various businesses, guys. They are into oil and gas. What else, guys? What else Reliance is into? Telecom. What else? Entertainment. Entertainment. Apparels. Retail, basically. What else? Media. Yes. FMCG to some extent also now. Reliance Power is a different company. Our Power is not the same group. Our Power is the Anil Ambani company. So let's say you decide to sell this unit. Media is something you are looking to sell. In the near term, you are looking to sell the media business. So this you will report it separately. You will report it separately as a DCO. Point clear or not, guys? If you are having the immediate plan of selling it, you will separately report it. Is this point clear? Why is that so? Why do we do that? So understand. If we look any company, let's say I'm looking 2020, 2021, and 2023. I say profits of the company is 100, 120, 160, 180. Now I'll say company is good. The profit of the company is going good, that it is continuously increasing. As an investor, I like that company. But if I give the breakup of this, 90 of this is coming from the continuing operation. 90 of that is coming from discontinuing operation. So that means, is it possible for next year, 24, 25, I will not have this business because company is looking to sell this business. Point clear what I'm saying, guys? Now, if I look, this performance is not very good, guys. That I'll be sustaining. This is the business which will sustain over a period of time. This is the business which will continue over the period of time. Point clear? So as a investors, I really want to know the position that, boss, are you going to, I should not look the overall 100, 120, 160, 180. I'll see, boss, which business you are looking to continue, because I'm not investing for 10 days, 15 days. I might be investing for 5 years, guys. Point clear what I'm saying, guys? Yes, no. That's why it's important for investors to know what is the continuing operation, what is discontinuing operations. Uh, we'll do 15, 20 minutes more, guys, then we'll stop for a break, okay? Now, what are the basic challenges of the income statements, guys? What is the basic challenges of the income statement? What do you think, guys? What is the problem with the income statement? Any problem with the income statement, guys? No problem. All good. Assumptions we are taking. Assumptions are not good. We did not take the assumptions. This is a problem with the assumptions. Misleading. So basically, problem is not with the assumptions, Manish. Problem is that it can be manipulated. Point clear what I'm saying? that sometimes companies can manipulate the financials also. Point clear what I'm saying, guys? Everyone? Uh, for example, guys, if correct manipulation can be done. Any example? Errors can be anywhere, no, Maruti. Errors can be in the balance sheet also. Errors can be in the cash flow statement also. Error can happen anywhere, no. I'm saying the problem with the income statement. But depreciation method change has no problem here. No? What is the problem? The how you can manipulate this? That's my question. How can you manipulate this? When you're saying it can be manipulated, income statement can be manipulated. How? You are showing the wrong profit, showing high income. How? By showing the fake bills? By showing the fake bills? Is that what you say? But that's a fraud, no, guys. That's a different point. It's a fraud. It's unethical thing. It's a fraud. Fraud can happen anywhere. Fraud can happen in our teaching also. Right now, what we are having it, I'm assuming you're studying, but you're not studying. Fraud can happen in the balance sheet also, cash flows also. If it is fraud, then it's a different point. I'm talking about the problem with the income statement, in the structure of the income statement. Manipulation can be provisions. Very good point, Amit, because that can happen in this case. Let's see that, guys, here. For example, there are two companies, guys, A and B. If I'm saying sales, okay, let's say EBIT of both the companies, guys. EBIT of company A is $4,000. EBIT of company B is $3,000. Which is a better company? Obviously, you would say A is a better. Agreed with you. Sales is, we'll do that. Wrong. Look at this. Sales is 50,000 here. Sales is 50,000 here. Which is the better company? If I look at the sales level, guys. Nothing. Why? Sales is same, no? Manish. What is the problem? They are same. No change. If I'm telling you they are having fixed assets, guys, which is 10,000, 10,000 here. Which is a better company? Same, no change. Fixed asset is also same. Fixed asset is obviously not coming in the balance sheet. If I tell you guys, their gross profit is also same, guys. Their gross profit is also same here. No change. But let's say everyone, company A charged the depreciation. Depreciation at the rate 10%. This company charged the depreciation at 20%, guys. So how much depreciation they are having? $1,000. How much depreciation they are having? $2,000. Premise clear or not, guys? So everyone, if let's say my EBITDA, let's say up to EBITDA, they are same. 5,000, 5,000. Up to EBITDA, they are exactly same, everyone. But just because this company has charged this higher depreciation, or I can say this company has charged the lower depreciation, this company is looking better, guys. Point clear what I'm saying? But has operationally this company done the very good thing that their operations are very good, their efficiency is very good? Nothing. Nothing in this case. What they have done, they have just manipulated the depreciation method in that. Point clear or not? So company can inflate like this. Is this illegal? Not at all. This is not illegal. It is not the fraud, guys. We have just manipulated the depreciation methods, guys. Point clear or not, guys? Everyone. Is that okay? It could be the same thing, Maruti. It can be for showing the saving the taxes. Yes. I'm here. Page number 22, everyone. Management has the ability, something what you were saying about the provisions also. Let me talk about that quickly also. Provision can also manipulate this, guys. For example, guys, company A and company B. This company is charging provision for bad debts and the doubtful debts as 0.2% of the debtors. This company is charging 2%. So where my expenses are going to be higher, guys? A or B? Obviously here in the B, my expenses are going to be higher. Here it is going to be low. Where my profits are going to be higher or lower? Where my profits are going to be higher? Obviously my profits are going to be higher. Lower. Point clear? So maybe with the provision amount, you can manipulate this also. Point clear, John? So management has the ability, I'm page number 22. Management has the ability to change the reported income through the use of the assumption and estimates. Assumption and the estimates are utilized to account for the depreciation, warranty costs, allowances for the bad debts, everyone. For example, depreciation uses the multiple estimate. You are using the useful life also. I'm changing my useful life. It will change everyone. Salvage value, whatever I'm doing it will again change it. Depreciation method which I'm choosing, it will change it. Everything in detail, guys, do with you in the asset method, guys. If you remember, I told you when I'm going to discuss the long-term asset, I'll talk about this detailing of that. Okay. Now, likewise, the warranty costs, allowances for the bad debts require the use of the estimate. The subjective nature of the items evaluated result in the increased risk of the manipulation of that. So, because of that, manipulation can happen, guys. All I'll cover it later. Warranty, allowances for the bad debts, depreciation, all of it I'll cover in the coming modules. Are we good up to here, guys? Manipulation of the assumptions. Manipulation of the assumptions and the estimate is sometimes referred as income smoothing, everyone. What is income smoothing, guys? For example, guys, if there are two companies, company A, company B. Okay. Companies A profit is like this from 2020 to 2025. Here 2020 to 25 is this. Which is a better company, guys? A or B? Which is a better company? Why? Why A? Profit is increasing now. It's a more stable profits, guys. Stable. With that, here also, if you see here, profit is increasing here also. Here, 2021, we are having a better profit here in company B Khushbu than this. The point is not better profits. Eventually, the profitability is more or less same. But here we are having more stable profits, right? Uh, rather than the volatile method in that. Sure, John. John, you are in front of you. There are two companies, graphs, company A or company B. Which is better company to you? Company A and company B. Which is a better company to you? Company A. Why is that so, John? Because here profitability is more stable. Point clear? That's why we prefer this company. It's a more stable growth what we are having. Point here. So many a times companies change their accounting methods, accounting adjustment, so that they can show more stability in their profits. Point clear or not, guys? This is what is known as income smoothing, guys. They're trying to smoothen the income, guys. They're trying to smoothen the income. That is what we make the adjustment in the financials, guys. We make the adjustment in the financials so that it would be more smooth in everyone. Let's try to do this with one example, guys. Uh, let's say in the year 2019, everyone, in the year 2019, companies has purchased 50 laptops. Company has purchased 50 laptops for their employees. Now, whenever you purchase the laptop, guys, you have two options. You can either capitalize that or you can expense that. Do you understand the difference in the capitalize and expense, guys? Everyone? Capitalize means I'll book it as an asset, and over a period of time, I will charge the depreciation on that. Expense means, everyone, that I will not capitalize as an asset. I will directly put it into the P&L, guys. Is this point clear, everyone? So, everyone, if I'm saying I'm capitalizing, guys, okay, and I'm purchasing the laptops, let's say I purchase for $70,000. What entry would you do, guys? If you are capitalizing, what general entry would you do, guys? You're purchasing the asset, no, guys? What entry would you do? When you're purchasing the asset, everyone, you will do fixed asset, debit 70,000 to cash, or maybe you're having it cash 70,000. Is this point clear or not, guys? Let's say this laptop, everyone, this laptop, you are going to use it for 5 years, guys. This laptop, you are going to use it for 5 years. What is going to be depreciation? And let's say you are following SLM, guys, straight line method of depreciation. So what is going to be depreciation per annum, guys? Depreciation is going to be 70,000 divided by 5, everyone. So it is going to be 14,000 per annum. Is this okay or not, everyone? Where the depreciation will go? Depreciation debit to assets, everyone. Depreciation debit to fixed assets. How much? 14,000. Is this point okay or not, everyone? But if I'm booking everything as my expenditure, guys, this is when I'm booking as my capitalized, guys. Second choice, which I'm saying, everyone, I'm booking everything as my expenditure. So what will I do here? I'll say my IT expenditure debit, which is $70,000, guys, and to cash. And this IT expenditure will go to my P&L, everyone. P&L accounts debit to IT expenditure. Is this okay or not, everyone? Any doubt? Should I repeat? No, COGS will not increase. My other income will increase. We have till 2:30, Akshay. Clear, everyone? Should I move up till here? Yes, no? So, everyone, if I'm making parallels here, guys, for 5 years, guys, if I'm booking as capitalized, guys, then what will happen? In the P&L, guys, how many amount is going? 14,000. 14,000, 14,000, 14,000, and 14,000. It is going as a depreciation per annum. It is going 14,000. Is this point clear, everyone? Any doubt, guys? Please let me know. So this is my values going for 2019, 2020, 2021, 2022, 2023. It is more stable. It is something which is more stable, guys. Is that okay? But if I'm saying you are booking as an expenditure, guys, then entire amount will come 70,000 here, guys. After that, nothing will come. Is this okay, everyone? Yes, no, maybe. So I'm having a higher expenditure here, and after that, my expenditure is going down. Should I move? Is that okay? Now, please hear me out carefully. I'm just discussing how income smoothing works, guys. If I'm saying, guys, let's say this year is 2018, and suddenly in the year 2019, my profit has gone up. Why my profit has suddenly gone up, everyone, in 2019? Maybe I have sold one of the product 2019, everyone. I have sold one of the, I got a big order in this particular year, and I got the export order in this. Generally, I don't get the export order, but for this particular year, I got the export order. And here, everyone, because of the dollar also, I got a very good margin here. Point clear what I'm saying, guys? That's why suddenly my profit is looking very high in this particular year. Point clear or not, guys? Everyone? Yes, no, maybe. Okay. Now, again, next year, COVID arrived. That's why my profit has been completely tanked because of the COVID. Next year is completely tanked, everyone. So in this case, guys, what I can do here in this case, I can slightly manipulate my financials here. What will I do? Whatever the laptop which I purchase here, guys, what approach will I follow here? I'll follow the expense approach here, guys. Expense approach means how much will go into the P&L now, guys, in 2019? How much will go into the P&L? 14,000 or 70,000? Very good. 70,000 will go, guys. 70,000. No, Manish. Expense is 70,000. Guys, any question ask me here. It's very difficult to repeat the entire story again. Is that clear? So what I'm doing here, guys, I am booking the higher expenditure here. I am booking the higher expenditure here. Is that okay? Rupesh, because first year, no, it is 70,000 in the first year. I'm not booking, I'm not booking as the asset. I am booking the entire amount in the first year itself. I'm not capitalizing and depreciating. In the first year, I'm booking this. Any question now? Guys, can't repeat everything again. So please ask me now. So in the year 2019, I am booking the higher expenditure. What is the advantage? Would your profit will increase or decrease with this? Will your profit will increase or decrease with this? Obviously your profit is going to decrease. Is this point clear or not? So maybe my profit will decrease like this. Up till here, my profit has gone down. Point clear or not, guys? Okay. Is it good for the company? Bad for the company? I don't know why the company is doing it. Point is, guys, now my profit has gone down. Next year, how much is my expenditure, guys? Next year on the laptop, how much is your expenditure? Zero. So next year, when the time is tough, my profits are going down. Profits is going down. My expenditure is much lower, guys. Nothing I have expenditure on that, guys. That's why everyone automatically my profits will look higher. Point clear what I'm saying, guys? Automatically this next year, my profit will increase in that case. Yes, no, maybe. This is what known as income smoothing, guys. You are smoothing your income in that case. Sure, Kushbu. Kushbu, have you understood this point that the laptop I'm charging the higher expenditure here? Okay. Let's say, Kushbu, you are capitalizing. You are capitalizing. That means every year, how much you are putting into the P&L? You are capitalizing. So how much you are putting every year into the P&L? You are putting 14,000, 14,000. Point clear? Khushbu, I am not booking as a capitalizing. I am booking as 70,000 in the first year. Point clear, Khushbu? So next year, how much expenditure you will write? Next year, how much expenditure you will write in the P&L? No. How much expenditure you will write in the P&L? Khushbu, you are here. You are capitalizing it. You are capitalizing it. Don't copy paste the answer, previous one. Listen carefully. You are putting 14,000. How much I'm putting it? I'm here. This is me, Khushbu. This is you. This is me. This is you, Khushbu. How much I'm putting next year? I'm putting zero. You are putting 14,000. Point clear or not? This point. COVID impacted your business also. COVID impacted my business also. But whose profit look will higher? My profit will look higher, Khushbu, in this case. Why? Because I booked the previous year all the expenditure. This year, my profit will look better. Point clear? That's what I'm saying it here. Last year, I got a very big export order. That's why my margins were very high. So what I have done it, I have increased my expenses so that my profit will taper down. Ideally, it is a spike in the profit, but I have booked a higher expenditure so that my profit has gone down to this level, to the red dash mark. Is this okay? To this profit. Now what is happening? Next year, you guys are booking, other people are booking the depreciation. I don't need to book it because I have already booked it. So that's why others' profit are going down. My profit will be still more stable, guys. Here, can you see that? Why? Because you are booking the 14,000. I don't need to book the extra 14,000 because I have already booked in the previous year. Point clear or not? Khushbu clear? John clear? So what I have done it, this volatility which I'm having, I made it more smooth in this case. This is what is known as income smoothing, guys. Is this okay? Is this illegal, guys? Is this illegal? No, nothing illegal in that case. Nothing illegal in that case. This approach is also known as cookie and jar, guys. Just for your knowledge only. This approach, what I have followed here, guys, it is something which is known as cookie and jar approach. What is cookie and why cookie and jar? Basically, what I'm saying, in the year 2019, in that year 2019, when I'm having a lot of high profits, guys, when I'm having a high profits in the year 2019, I'm not wasting that profits. I am putting that profits into a jar, guys. I am using that money. I'm putting that 2019 profit in a jar, guys. Point clear what I'm saying, guys? Next year, 2020, guys, when my profits are bad, guys, time was bad, I'm eating that cookie, guys. I'm using that cookie in that case. That's why it is known as cookie and jar approach also. Point clear what I'm saying? Just for your knowledge, you don't need to worry about this. Should I move? Any doubt, guys? Again, another manipulation can happen, guys. Another manipulation can happen, guys. Whatever is my operating expenses, guys, I am showing my operating expenses as non-operating expenses. I'm showing my operating as non-operating. Why would you do that, guys? Why would you do that? Obviously, to inflate your expenses, guys. To inflate your expenses, you are doing that. Is that point clear what I'm saying, guys? It could be other way also, guys. It could be, for example, guys, for example, guys, if I'm saying my operating income, guys, and let's say non-operating. Okay. Let's say income I'm having, operating income is 1,000, and non-operating income I'm having 500. Expenses, everyone, I'm having it, let's say 600. This is 200 guys. So how much is my operating profits, guys? Operating profit is 400 and this is 300. Is this okay up till here, guys? How much is my total profits now? Total profit is 700. Is this okay, guys? Everyone? Okay. What I'll do, guys, here, some profit here, guys. Some profit I'm reducing from it. Some expenses I'm pushing it here, guys. So I have reduced here. I'm reducing here $200, guys, here. And this 200, I'm pushing it to the non-operating. So operating expenses of 200, I'm pushing to the non-operating expenses. Is that okay? So now my operating expenses is 400, guys. And what is going to be my non-operating expenses now? 400 in that case. Is that okay or not? Now what is my operating profit looking like? Operating profit would be 600. What is my non-operating in that case? 100. Is total going to change, guys? Is total going to change? No, total is not going to change, guys. But with this, what I have done it, guys, I have shown that my operating performance is much better. With this, I have tried to say that, see, my operational performance is so good. Point clear, guys, what I'm saying? This is regarding the expenses. It is regarding the expenses, guys. I can manipulate with the income side also, guys. I can do the income side also. That means whatever is the non-operating income I'm having it, I'll try to push it to the operating income, guys. Maybe I'm having interest on the FD. I can take the assumption, see how you have made the FD. You have made the FD from the business money also. So this is also operating. Yeah, I'll come back to that, Harshit. It's a very valid point. So if I want to increase the operating profits, if I want to increase my operating profits, I can do it two ways, guys. Either I can increase my operating income or I can decrease my operating expenses. Point clear what I'm saying, guys? These are the two ways, guys. These are the two ways I can increase my operating profits, guys. That's it. When I'm increasing my operating income, non-operating income will come to my, but if I'm decreasing it, this will go to non-operating. Should I move, everyone? Now, Harshit, question is, can we do that in the reality? I agree, sounds challenging, but the point is, Harshit, we are making our own books of accounts. So this is the senior management. These are the people who are making the books of accounts, right? You are making the books of accounts. Now, when you're making the books account, you can do anything. No one is coming and watching you. Point clear or not, guys? But now the auditor will come. Now the auditor will come and review this, guys. Auditor will come and they are going to review your financials. Are we good up till here? So she's going to come and she's going to review your books of accounts. Point clear, Harshit? Guys, clear, everyone? Clear, Harshit? Okay. Now, whenever auditor comes, they are not going to watch your 100% of the transactions. They are not going to watch 100% of the transactions. They are picking few items on a sampling basis, maybe 1 to 2% items they are looking into the sampling basis. So chances are very high that whatever this kind of a thing you have done it, this will not come to her attention. Life is secured for you. You are happy because it has not come to her attention. You are sorted. Point clear what I'm saying? Second thing could happen. She become aware about this, that yes, you have done the manipulation in that case. You have told her that don't worry about this. You will get your cut. Your salary, your remuneration, we are going to increase in that case. Again, she'll keep quiet on that also. So these are both the unethical things, whether she's getting quiet about this or it does not come to that. Obviously, both are unethical things. Point clear what I'm saying, guys? But practically it happens. Practically it happens. Whenever you see any kind of a scam, guys, when you have seen the scam of Satyam Computers, PwC was badly involved in that case. PwC was not even check there how much is the cash balance they are having it. So they were sleeping. They're not sleeping. Obviously, they're not sleeping. They are actually involved in the fraud itself, right? So whenever generally any financial fraud happens, either auditor or the credit rating agency have to be involved in that case, or unless they are absolutely useless. Lehman Brothers was not about the auditors; it is more about the credit rating agency. Point here. Should I move, guys? Does that answer your point, Harshit? So yeah, it's unethical. It's not correct, but no one is actually 100% checking your point. So people can manipulate that. Again, ideally it should not. That's why if you see many regulations, so many regulations have come in that says that boss, if you have done anything like this, for example, if you are changing your depreciation methods, if you are changing your percentage in that case, you have to report that. That's why there are many things which will not come to the auditor's attention because auditor is not checking 100% of it. That's why the burden has been given on the company that boss, if you are changing any of your method, if you are changing any of this, you have to report it. Now question comes, if they don't report it, then it is outrightly the fraud, guys. Then obviously penalty would be imposed on that. Other things would happen on that. Something Byju's has done it. Is that clear, people, what I'm saying here? Quickly read it. If anyone has a question, doubt, please ask me, guys. I'm here. Please read page number 22, guys. Agreed, Harshit. That's what I'm saying. It's unethical, it's wrong. But how do you know, Harshit, whatever the financials you are looking, let's say you're watching the biggest company in the country. Let's say you're seeing Reliance also. How do you know the Reliance has not done the fraud? We don't have any ways to know that. We are saying Reliance is making huge profit, huge profit. How do you know they have not done the manipulation? No, no ways. There's just no way you can do that. No. The only way for you is trusting the auditor. That's the only way for you, that you are trusting the auditor, that auditor is not doing fraud, auditor is not sleeping, and auditor has doing their job honestly. That's the only thing you are having in this. Point clear what I'm saying? That's how it is. That's why the onus is on the on the authorities in that case. For example, if I'm just saying the case of a Reliance, I'm not saying everyone is doing it, but if they're doing it, how would you know that? That's my point is. Many companies do that. Many companies do that. Many companies do that. Almost 90% companies does that. But one is outrightly doing the fraud. See, there's a lot of differences also, Harshit, in this case. One, we are going into wrong trajectory. We'll finish this faster. One is outrightly I'm doing the fraud. I don't have any employees. I'm actually having 50 employees, but I'm showing I'm having 500 employees. Why? Because I'm showing the fake Aadhaar, fake bank account, fake everything in that case. This is outrightly fraud, right? But I second method is I have changed my method of depreciation. I've changed. I was following capitalization of the laptops. Now I'm expensing. It is not so fraud in that nature. Point clear what I'm saying? So depends. आपने कितनी चोरी की है, right? It depends on that. One is outrightly someone is printing this, someone is doing that, then outrightly fraud. But someone who's changing, play around with the method, it's not really any kind of a fraud as such. So it depends how much you're doing it. But most of the companies use that. As an investor, you don't have any choice. No choice. Zero choice. As you done reading, guys. Everyone, is that okay? Done reading? Okay. This is the same thing what we have done it, everyone. Multi-step, same thing what we have done it. Gross margin. This is net income. Multi-step we are having. Quickly read this. I think this is simple. Read this. Anyone has a problem? Please ask me that. State 23, 24. I'll wait for your confirmation. Instead of salary taking, so Rupesh, you are not taking the salary from the company and you are saying, please give us the shares. Is that what you're saying? Up till here, are we good? If you are not taking the salary, I guess I'm not sure what is your question, Harshit. Write it again. Instead of the salary, you are taking the shares, which is okay, Rupesh. If instead of the salary, cash salary, the company is giving you the stocks, very much possible. So there is no problem in that. The first, there is no problem, Rupesh. Then taking the loans against the shares, you can take the loans against that shares also. Your wish, no problem. How you're saving the taxes? How you're saving the taxes? When you're receiving the shares, it is also taxable. No? When you're receiving the shares, it is also taxable. Again, a good point, Priyank question is that earlier laptop, whenever I purchase the laptop, I am booking as I'm capitalizing it. Now suddenly 1 year I change to expense. Correct? Am I right? Am I right? That's what your question is, Priyank. Yeah, agreed, Priyank. That's what I'm saying. I changed my accounting principle, no, Priyank. That earlier I was booking the laptop as capitalized. This 1 year I'm suddenly moved to expense. This is wrong. Ideally, it is my responsibility as a senior management of the company to report to my shareholders that boss, this year my profit is hitting this, my profit is going down because this is what I have done it. This is what I have done it. It is your responsibility to tell your investors. That's what I'm saying here. But are they doing it or not? We don't know. That's what I'm saying. So you need to understand we all are working on the trust basis itself. That management is not a fraud. That's why if you see, whenever we talk about you should look for the investing, we are not looking at how good is the ratio, how good is the financials. Because financials, you're cooking the books. What else you can do it? I am making my books of accounts and I'm saying my profits are 20,000 crores. But all of our fraud, then what will you do? Then you ratios are useless. The most important thing for you need to look into the company whenever you are looking to invest is the management integrity. Is the management is fraud? They are cooking the books, then finish. It's useless to see the financials. Point clear what I'm saying? That's why the most important thing is looking at the management integrity. Generally, we should, so John, it depends on the, again, we are going on the wrong trajectory, but generally, quickly, I'm wrapping the questions, right? Um, Generally anything which is more than $5,000 we capitalize, and anything which is going to give you benefit in the long term we are going to capitalize. Okay, I'll do this when we discuss the fixed asset point, no, John. I'll cover that. For example, remember I told you here I'll do the long term asset. I'll talk about this. Read this, guys. Read this question 23, 24. Please read and confirm. Anyone, any question, let me know. Done, everyone? You can do the case, Harshit. Harshit, are you there? I'm just seeing your question. Okay. I think let's stop for a break, guys. I'll see you guys at 1:30. We'll start from there. Thank you. Hi, everyone. Quickly confirm if you have joined. I'll start. Any question till now, guys? Anyone, any question till now? Whatever we have done it? No? Talk about the balance sheet, guys. Balance sheet. What else we call the balance sheet, guys? What else we call the balance sheet? Statement of financial position, guys. Statement of financial position, not the performance. Because it tells you the position only for 1 day, guys. That's why it's called the statement of financial. No, we don't have any WhatsApp. We have the WhatsApp channel, Akshay. We have the WhatsApp channel. So if you are not at the part of the channel, you be the part of it. Guys, are you the part of the WhatsApp channel? Everyone? Okay. I'm just sending you the link, guys. Please be on the WhatsApp channel because in case we are sending any information or anything, so we know that we'll not sharing it. This for our batch only. So you are attending the class action. Uh, you have to check with the VGLD team. Though there is a group, but now they have stopped creating the group. Earlier they used to create the group, but now they have stopped creating the group. So you can check with the whoever is your counselor, be in touch with that person. Okay. Uh, Regarding if you have any queries, you can ask me in the class itself, guys. You can ask me in the class itself, whatever the queries you are having. Also, we are planning to keep that within uh, 15 days or within 20 days, we'll keep a one query session also, especially 1 hour query session. We'll keep that also. Okay. So I don't think course wise you'll have any problem. Otherwise, if you have any queries regarding your LMS is not working, your Becker is not working, for that you can be in touch with your counselor. Okay. Guys, I'll move on. Balance sheet, guys, it will have two elements. Mm. This side is what? Liability or asset? What is this side called? Here we are having liabilities, guys. Liabilities, everyone, can be long-term liability. It can be short-term liability also. And we are having equities also here. This side is also known as sources, guys. Sources of finance, sources of funds, everyone. Long-term liability. What else we call it? Long-term liabilities, guys. Long-term liabilities. What else we call it? we call it non-current liability. This is something we call it current liability. Is this okay, people? Similarly, on the liability asset side, I'm having long-term assets and short-term assets. This side is basically application, guys. Application of funds. So sources, application, guys. Long-term asset, we also known as non-current asset. This is current asset. Is this okay, people? So can I say this, guys? Asset is equals to liability plus equity. Is that correct? Yeah. Or if I shuffle it, equity I can say is asset minus liability. Simple. We learned this in 12th standard. Simple. Guys. I hope it is okay. Let's read it. I'm here on page number 25. Simply read this. Page 25. Please confirm. Just the mark portion. So stockholders equity, also known as, give me a minute. Sorry. Let me specifically talk about balance sheet first. I'll come back to that again. Okay? Please do this. Page number 29. Should I move? So the balance sheet reports the financial position. It tells you the position, everyone, at a specific point in time. Position at a specific point in time. So it is basically for one day, guys. The formal of the balance sheet is a statement of financial position. We have done this. Balance sheet provides a list of the asset liabilities held by the entity, which are classified into the meaningful categories, everyone, and the owner's equity. The information is particularly valuable for the lenders, investors, company management, and even the competitors. Competitors want to know that how much debt you are having, how much equity you are having, how much asset you are having, all of it. Classification of the items allows the users to determine not only the composition, everyone, but also evaluate the liquidity, everyone. I'll talk about that. That means how much asset you are having, how much liability you are having, how much funds you are available in that case. So they'll get to know about this also. Is that okay? Now, what is current asset, guys? What is current asset? You're giving me the example. I'm telling you what is current asset. Correct. Anything which you are going to convert, any asset which you are going to convert into cash within 1 year, or whatever is your operating cycle, guys. Whatever is your operating cycle, whichever is higher, whichever is basically longer, guys. So if you are going to convert everyone, uh, your entire asset into cash, everyone, then it is going to be current asset. Point clear, guys? So, okay. We are going to show the current asset, everyone. It is very much possible that current asset we are showing it, current asset we are showing it from the most liquid, everyone. Most liquid to the least liquid, guys. What is the most liquid current asset, guys? Cash. After that, maybe the money you are having in the bank, everyone. So whatever is the cash, then the bank, not inventory. Then you are having short-term securities, guys. If I have done any kind of a small money investment, then maybe debtors, everyone, then maybe inventory, all of it. So you might arrange that in this order, guys. Top to down. Point clear what I'm saying? Uh, Investments, guys. You might show the investment also. Bills receivable will also be the same thing. Investment, does the investment is an asset or the liability, guys? Investment is your asset or liabilities? Investment is an asset for you. So here it could be anything. You have done the FD investment. You have done the investment in a shares of another company. Is that possible? You are purchasing the shares of another company. That means, is that possible? Amazon is purchasing Tesla shares. Possible. You have made the investment in another company shares. You might have done the investment into mutual funds, right? You might have done the investment in another subsidiary of yours. That is also investment, guys. Point here. So all of it will come under the investment, guys. Is that okay? Let's look up till here, then I'm going to move. Right? This. I'm here, page number 29, just these two items. Confirm after reading. Clear? What I'm saying, everyone here, that we are saying that these assets are going to be current asset if they are converting into cash within 1 year, or whatever is your operating cycle, whichever is shorter or longer, whatever is longer, longer guys. Generally, I talk about any retail guy. If I talk about any retail, in the retail operating cycle is high or low? Operating cycle is low, guys. For example, if I talk about, let's say, DMart, they are purchasing any item, they are purchasing the raw material, and they are selling to you very fast. They're selling to you very fast. It's not like they are keeping it for many, many years, the inventory. No. Generally, their cycle, their operating cycle is very low. Generally, the operating cycle is couple of weeks. Let's say maybe 6 weeks. Is that okay, people? So for DMart, everyone, we are what should we take? 6 weeks or 1 year, whichever is longer. So which one should we take? Longer is 1 year. So in this case, guys, even if the asset which is having the period of up to 1 year, I'll consider that as a current asset. Is this okay or not? Anything not clear, please let me know. Should I repeat? Clear? Pushbu, clear? But if I talk about, let's say, any construction company, sure, Maruti. Maruti, why do you wait that I'll ask you 3 times? Repeat, repeat. Ask me on your own, no? Which point is not clear? Guys, ask on your own. Why you do that? Whole point, Maruti. Up till where you have heard it. Up to where you have heard it. Maruti, up to where you have done it so that I can repeat after that. Reconnect them we talk. Okay. First reconnect. Let's see not get this also. Is that point clear, guys? Whoever have heard it, any question? Guys, any doubt? Suman, Rupesh. Should I repeat this, guys? But generally, if it is, let's say, any construction company, guys, then your operating cycle is relatively longer. It can be many years also. It can be, let's say, 1.5 years, guys, here. So what should I take here for the construction? Let's say L&T. I'll take operating cycle is 1.5 years because for them, it might take time for to convert that. So for them, what will we take? 1 year or 1.5 year, whichever is longer. What is longer, guys? 1.5 year or 1 year? 1.5 year. Very good. So in this case, even the asset which is getting converted into 1.5 years, what do we classify that as? Current asset or non-current asset? We'll classify them as current asset. Current asset, Khushbu. We are taking longer value, no? We are taking longer value. All clear, Khushbu? As we have done it previously, Maruti, in case of a retail, operating cycle is lower. I gave you the example of a DMart. DMart cycle is, let's say, 6 weeks, right? So what we are saying, 6 weeks or 1 year, whatever is longer. What is longer? Khushbu, what is longer? 1 year is longer. Prasanna, clear? So you are having any asset which is getting converted in 1 year, which is getting converted 1 year. Your operating cycle is only 6 weeks. But anything which is converted in 1 year, still I will take the current asset because we are taking the longer value. Is this point clear? Uh, should I repeat? Anything is not clear, everyone? Don't worry. These items, when we are going to discuss the various assets, we'll cover that again. This is just broad overview we are discussing right now. Any long-term asset, guys. Give me an example of a long-term asset, guys. Any example of a long-term asset? Warehouse, building, plant and machinery. Correct. Land, but we don't depreciate land. That's the only difference. Now, here everyone, we are going to furniture equipment, correct? Let's say we purchase these machinery and everything. We have purchased at everything for $1,000, guys. This is going to be my historical cost, guys. Is that clear? From that, everyone, we are going to reduce whatever is your accumulated depreciation, guys. So that means maybe you have purchased in the year 2020, you have purchased for $1,000, guys. In the year 2024, you have charged over a period of time, you have charged a depreciation of 150. So now the value is approximately 850. So I'll do that. This minus this value is 850. Is this point clear, everyone? There are many intangible assets, guys. What are the intangible assets, guys? Anything which you can't touch, feel, correct? Goodwill, patents, copyright, what else? Trademark, various softwares. All of it are the intangible assets, right? Do we depreciate the intangible assets, guys? Franchise. Do we depreciate the intangible assets, guys? No. Then what do we do? We amortize them. We amortize. Correct. We are going to amortize. Is that okay? Hmm. Please read this. Up to intangible assets and property goods. Up to page number 30, please confirm. Is that okay? Should I move everyone? John, clear? Other asset, everyone. So other asset is more like a ETC category, guys. all catch-up category of the non-current asset. This category is reserved for the asset that will not fit into the any of the category. So this is more like a ETC category, guys. For example, long-term prepayments, guys, deferred charges, deferred income tax, all of it would be considered as the other asset. I'll talk about that in detail later. Each company varies in the terms of the asset composition. Obviously, everyone. Does every company will have the higher current asset? No. Does every company will have the higher non-current asset? No. Different company will have a different thing, everyone. Yeah. Now, liabilities, everyone, same fundamental what you have done it, guys. Liabilities, current liabilities is short-term, long-term. Short-term. Same fundamental, guys. Same fundamental. That I am doing it within 1 year or operating cycle, whichever is longer or shorter. 1 year or operating cycle, whichever is longer or shorter. Longer. Here it is the reverse. Here it is the reverse. I am supposed to pay these guys. I am supposed to pay these guys within 1 year or operating cycle. Pay within 1 year or operating cycle, whichever is longer. Is that okay, everyone? Long term means, or the non-current liability means something which I'm not going to pay within 1 year or within the operating cycle. Something which I'm not going to pay is long term, everyone. Let's say, everyone, this company has taken the loan from a bank. Let's say you have taken the loan of $10,000, and this loan, what you have taken is for 6 months, guys. Is it current liabilities, non-current liabilities? It's a current liability, guys. I hope it is okay. It's a current liability. You have taken this loan, but this loan, what you have taken, is it for 10 years, guys? 10 years. Current, non-current? It is going to be non-current. It is going to be generally non-current. Should I move if it is okay, everyone? Bank has given the loan $10,000 for 10 years, guys. Okay. But the company is supposed to, let's say this loan, what you have taken this loan on 1st of January 2025. Guys. This is the loan you have taken. Company is supposed to repay, guys, $1,000 per annum. So that's why within 10 years, the loan would be repaid. Point clear, guys, everyone? Should that clear? So every year I'll keep paying 1,000, 1,000, 1,000. Every year I'll keep paying it, guys. Now here, everyone, if I'm sitting right now in the on 1st of January 2025, how much money I have to pay within 12 months, guys? Within 12 months, how much money I have to pay? $1,000. Very good. So this $1,000, everyone, is going to be my current liability. So basically, whatever is the current portion, guys, whatever is the current portion of the non-current liability, guys, would be my current liabilities. Point clear? How much I have to pay after 12 months, guys? How much I have to pay after 12 months? $9,000. So $9,000 would be non-current liability. Is this point clear or not, everyone? This is my situation for 2025. If I look the situation for 2026, what is my current liability, guys, for 2026? What is my current liability for 2026? How much you have to pay for the next 12 months? 1,000 again. How much is after 12 months, guys? Is it not 9,000? Is it not 9,000? No, because 1,000 I have already paid it. It is 8,000. Good point. Is this clear or not? Any doubt here, guys? Shivam, clear? Akshay? Let's read it from the book. Please read. If anyone has a problem, please ask me, guys. I'm here till here. Page 30. Please confirm once you're done. Every item, Suman, I'm going to do with you every item. So, for example, accounts payable, accrued liabilities, all of it we'll discuss it later. Okay. Though, just to answer your point, pension liability is you're having employees, and some of the employees will retire over a period of time. For them, it is your liability to pay them the pension. So, you create your liability for them. But I'll cover every item going forward. Should I move, everyone? It is okay. Then everyone, equity, you know that equity already, right? Equity is going to be assets minus liability. I'll talk about the equity in some time. Okay. The way you have done the limitation, guys, the way you have done the limitation of the P&L, that it is slightly manipulated. What is the problem with the balance sheet, guys? What is the limitation and the problem with the balance sheet? Without looking into the book, what is the problem with the balance sheet? Mhm. Historical cost is a problem? No, it is not appearing at the historical cost. Which item comes from the historical cost? Building does not come on historical cost. Without looking, guys, without looking, whatever is you actually feel it. Accruals is the problem. What is the problem with accrual? See, there are different items coming at the different values, right? That's a major problem. For example, if I'm purchase any plant and machinery for 20 years, it would be appearing at my net book value, which is basically whatever is my purchase price minus the depreciation. But this purchase price is very old. It is 20 years old price, everyone. So it is coming very old price, guys. On the contrary, if I purchased a new machine, guys, if I purchased any new machine which I purchased 6 months before, guys, then it would be appearing at a very latest price. So one plant and machine is coming at a very old price. This is coming at a latest price, everyone. If I'm talking about short-term investment, guys, this will appear as my market price, everyone. So it is very, very recent, everyone. If I'm talking about, let's say, current asset, you might have heard about inventory. How do you value that? Inventory, we value whatever is the purchase price or market price, whichever is lower. So if you see that there are so many differences coming, guys, something which is coming at a very old value, something latest value, something at the current market price, something which is at the value. So many different values are coming in the asset side. Point clear what I'm saying, guys? And obviously, same with the liability side also. So this can be involved very confusing. It is not giving you one value. If you say everything on the market value, then it gives you a current picture. Everything old value, then you understand that it's a mix and match of everything. Point clear, people? Let's read this, please. Please read. If any question, please ask me, guys. Page 32, just the mark portion. Is it done, guys? Is it clear? Okay. I'll move to the next statement here, guys, which is SCP, Statement of Changes in the Equity, guys. Statement of the changes in the equity, guys. Uh, let's say I'm making a balance sheet here, guys. Fixed assets are 100. Current asset are 50. Liability 30. Equity share capital, reserve and surplus is 120. This is coming 150. This is also coming 150. Is it always going to match? Is it going to always match, guys? Obviously, yes. If not, that means you have done some mistake. Uh, If I ask you guys in this question, what is your equity, guys? How do you calculate the equity? Equity is asset minus liability. What is my equity here, guys? 150 minus 30. So my equity is considered as how much? 120. Is that okay, everyone? Yes, no? This is something, this is something we also known as net asset, everyone. We also call it net asset because we are, what are you doing? You're doing asset minus liability. So it is net asset, everyone. Is that okay? This is known as net asset. It is also known as sometimes net worth also. We call it shareholders equity also. We just call it equity also. We call it owner's equity also. We also call the residual interest also. All of it. One way is I add both of them. If I add both of them, answer would be the same, 125. Is this okay? Should I move? Okay. Clear? Priyam, clear? There are two categories here, guys. One is equity shareholders capital and preferential capital. Are the same? No, obviously not. Preference in US we call it preferred also. The same thing. Whenever company is distributing the profits, guys, who will get the money first? Preferred will get the money, then the equity shareholders will get the money. Absolutely correct. If the company is going for the liquidation, people, who will get the money first? First, preferred will get it, then equity will get it. That's why they are also known as residual owners and residual interest owners. Is that okay, guys? Should I move? In US, guys, we typically call it equity share capital. We also call it common stock. We also call it ordinary stock. Same thing. Everything is the same. Remove. Let's look up till here from the book. I'm here, page number 25, guys. Stockholders' equity, also called the stockholders' equity, owner's equity, is the owner's claim to the net asset, asset minus liabilities of a corporation. Stockholders' equity is generally presented on the statement of financial position, that means balance sheet, as a last major section, following the liabilities. Accounts that make up the stock are classified as according to the source. Two primary sources of the ownership are amount invested by this paid-in capital and whatever is earned in that case. Whatever is the capital, we call it paid-in capital. Whatever you have earned over a period of time, we call it retained earnings, reserve and surplus cash. Shareholders' equity consists of four classifications. I'll talk about this in some time. Balance sheet reports at a specific point in time. So balance sheet is obviously at one point in time, everyone. The purpose of the statement is to disclose the equity amount at the beginning and the end of it. So what is my equity position in the beginning and what is my equity position in the end? That's what the purpose of statement of changes in the equity. That's what the name is. Statement of changes in the equity, guys. This information is especially valuable to the current potential investors, and the creditors. See that? Common stock, read this. Simple. Should I move, everyone? Uh, Company has taken the loan, guys. And when you have taken the loan, you have to pay the interest. Is it mandatory for you to pay the interest, guys? Is it mandatory for you to pay the interest payment, guys? Yes, it's mandatory for you. Company has taken the money from the preference shareholders, guys. Do you give the interest to them? No, you give them preference dividend. Is that mandatory for you to give them the preference dividend, guys? No, it's not mandatory for you to give them the preference dividend. Point clear or not, everyone? Yes, no, maybe. Now, preference shareholders can be variety of it, guys. So if I talk about preference share capital, one of the categories is cumulative preference shareholders, guys, and non-cumulative. Cumulative preference shareholders, non-cumulative. Let's talk about first the cumulative preference shareholders, guys. For example, if I'm telling you company has issued cumulative 6% preference shareholders. What is this 6% means, guys? What does the 6% means? This is the preference dividend rate, everyone. Okay. On what basis you pay the dividend, guys? Do you pay market price or do you pay on face value, guys? You calculate preference dividend on face value or market value? You pay on face value, not on market value. Let's say face value is $1,000, guys. So what is going to be my preference dividend here, guys? $60. $60 is going to be preference dividend. Let's see. Year is 2019. Your PAT, everyone. PAT is approximately loss of $1,000. If you are having a preference loss here, guys, at a PAT, would you give the preference dividend, guys? No. Would you give the equity dividend, guys? Absolutely not. When preference is not getting, how can you get this? No. But when it is cumulative, guys, when it is cumulative, these guys will write this entry in their diary. They will say that we are supposed to get $60 this year. I have not received. We will take it from the company later. Let's come to the next year, everyone. 2020, COVID year. Again, there is a huge loss, everyone. $5,000. Is preference dividend will get the money? Is preference dividend will get this? No. Is equity will get it? No. Again, these guys will write in their diary, we have not received $60. Point clear? Third category, 2021. In 2020, they will get it. Person, in 2020, is there any profit here? Can you see the profit here, Prasanna? Then why are you making the scenarios? Stick what we are doing. No, obviously there is a profit, you will get it. You're not listening, you're just typing it. Listen, no, what we are doing it. Obviously, you're just confusing with your chat, you're confusing other students also. We are obviously doing that. Listen, no, what we are doing it. 2021, you are having the recovery. You are having a recovery of $10,000. How much preference dividend will get it? $60? No. If you are cumulative, you will get for all the year 60 plus 60 for the previous year and 60 for the current year. Is this point clear or not, guys? Any doubt here? Prasanna, clear? Guys, clear? Any doubt here, please? Okay. But if you are a non-cumulative, guys, then how much will I get in this year? In the year 2021, how much I'll get it? If I'm non-cumulative shareholders, guys, preference shareholders. Very good job. I'll get only 6, only $16. Because nothing I'm not going to cumulate my dividends. I'm not going to cumulate in that case. That's the meaning of the name. That's the name, non-cumulative. Is this point clear or not, everyone? Lakshita, clear? Any doubt, please ask me, guys. Okay. Two people I'm talking about. Preference share capital can be cumulative and non-cumulative. Generally, again, it's not a law as such, but generally, guys, where preference dividend rate would be higher, generally where the preference dividend rate would be higher, and why? Non-cumulative, why? Very good, Suma. Because these guys are taking more risk. Because if they miss any of the year, they will not get it back. So these guys are in a way taking more risk. Since they are taking more risk on the company, they want higher return. Point clear? And how to get the high return? High return, they get it via preference dividend, guys. Point clear or not, everyone? Is it okay? Rupesh, clear? So that's how it is generally. For example, simple point, guys. If let's say tomorrow to the SBI, Mukesh Ambani goes and Anil Ambani goes. Let's say SBI has to give the loan to both of them. Where SBI will charge the higher interest in case of a Mukesh Ambani or Anil Ambani? Where SBI will charge the higher interest? Obviously, in Anil Ambani, because here they are taking the higher risk and that's why they want the higher return here, and bank charges interest for doing that. Same fundamental here also. Point clear? Should I move, guys? Similarly, preference share capital, guys, preference share capital can be participating also, participating, and it can be non-participating. Participating and non-participating. What do you mean by participating and non-participating? For example, guys, if let's say profit of the company is $1,000, okay, first who will get the dividend, guys? First who will get the dividend? First, preference shareholders will get it. So they take some dividend, everyone. Then equity shareholders will have taken that dividend, guys. Then whatever the money is left, guys, then whatever is the money left, everyone, in that preference dividend and equity shareholders might again share. If they have the right of sharing again in that case, such kind of a preference shareholders, we call it participate. Point clear or not, everyone? Yes, no? Clear? Again, quickly, guys. Again, quickly here. Participating or non-participating, generally where the interest is going to be higher. Preference dividend is going to be higher. No, participating. Have you heard this? Rupesh, have you heard this conversation? So participating means first you got your money, then you are again coming back. That means you are reparticipating, participating again in the profit. That's what we call participating. Okay. It has nothing to do with the voting. Correct. Non-participating guys, because which is more beneficial, guys? This is more beneficial, this is lesser beneficial. So in a way, these guys should get compensated. And how will they get compensated? By charging higher preference dividend. So non-participating is generally higher. Is that okay, people? Generally, generally participating guys. Participating is generally issued by the startups guys, especially in US, in the tech companies. Generally it is issued by the startups, because if let's say their company is initially startup initially is having the losses, then the preference shareholders will not get the money, rightly also, because company is not generating the profit. How will you give that? But whenever the company going forward generate a very good amount of profits, then these guys can get a higher bunch of that, higher pie of that profit itself. That's why generally participating is issued by the startups only. Point clear? Should I move, guys? Clear? Any doubt? Should I repeat anything is not clear? Prasanna, clear? I think the rest of it I'll cover with you tomorrow, guys. Anything not clear, whatever we have done it, people? No? Okay. I'll stop it here only, guys. I'll continue the statement of changes in equity tomorrow. I'll see you guys at 10:30. We will start in that way. Sure, John? John, you have any question? Deferred tax liability will do that. John, we'll discuss the deferred tax asset, deferred tax liability. I'll cover that. I've not even discussed that. I've not discussed, guys. I have not discussed any element of the asset. I've not discussed with you the liability also, assets also. I'll cover everything going forward. So this topic is an altogether different. In fact, this is the one more full module on that. So I'll cover that. The liabilities I'll cover. Clear, John? Okay, I'll stop it here only. Thank you so much for your time, guys. And I'll see you tomorrow, 10:30. Bye-bye. Have a good day.